back to another episode of Beating Alpha. This is episode 132, and we have a very special guest on. His name is Jared Williams. So, Jared is on a mission to revolutionize Christian personal finance. Jared began a Christian financial advisor firm called Biblical Wealth Solutions, and there's a website for that is called biblicalwealthsolutions.com. You should go and check it out. And his team is help families to achieve financial freedom using biblical and non-Wall Street investments so they can have the freedom to do what God has uniquely called them to do. That is a great mission. He's also the host of the Biblical Wealth podcast and the Building Biblical Families podcast that, of course, you can find on iTunes. Most importantly, Jared and his wife homeschool. They have 3 children and enjoy reading great books together as a family. So, Jared, I just want to say a big thank you for joining me today on this episode. I appreciate it.
Yeah, Martinez, thanks for having me.
It's no problem. It's my pleasure, as you said. So, listen, I would like to kind of go back to the times, and of course, we're going to go in depth the reasons for the business, and why you created, what's happening with the business, and how you help all these people to create that financial freedom. But can you talk about your personal background? I mean, where are you coming from? How did you get involved? Because I know you're raised as a Christian, but because I'm very interesting, because it's very specific. You're looking Christian, Christian type of people to reach the financial freedom. So can you talk about your background a little bit? I'm very curious.
Yeah, I could talk for a long time and give a long story or a short story. So I'll let you kind of lead that a little bit. But
sure.
So I never intended to be in finance. Like most financial advisors, that was not the plan starting out. It's rare to meet someone who studied it in college or something. There's not even a lot of college degrees, programs for it, honestly. So my degree is in social work. That's what I studied in school. The goal was to be a career missionary at that time. And I had gotten to do some short-term trips. I got to spend 4 months in Calcutta, India, right after college. And so it had always been the plan to go and do mission work overseas. But when we got married, my wife still had a couple of years of school left. And so I began working, and I, worked in the social work field. And the idea there was always for that just to be a platform, a means of getting to, other countries to share the gospel. And so it was never, never my intended career path to be in social work, but I did that for a few years. And then we got pregnant with my oldest daughter, and didn't want to take on a lot of student loans to go to seminary. And so it just never really happened that way. We didn't end up following that course that had been the plan. And so at that point in time, we were needing to increase income because we had a growing family. We planned on growing it more. And a friend of mine called up one day and said, "Hey, I got someone contacted me and introduced me to this company that sells term life insurance, and I can join up with them, and then I can recruit the people, and explain this whole thing." And that was the first time I'd ever seen, a multi-level marketing or a direct sales type of company. But he was like, "I know you read a lot of financial books. I know you like this stuff." Basically, he was saying, "You're a big nerd, and you probably can give me some advice on this." So I looked into the company and at that time, agreed with what all they were doing. And so I called him back. I was like, "Hey, you should join, and then I'll join up under you. And that will give some part-time income to me as well. And we'll see where this goes." And so that was a great learning experience. I didn't spend a whole lot of time with that company, but I learned a lot during my time, and went on into doing some home and auto insurance and business insurance. And that was a great learning experience as well. I learned that I'm not a sales guy. I mean, obviously I do sell, like that's part of my business, but it's not what I enjoy. I'm much more of the advisor, educator type of role. And was just never going to win when it came down to who was the better salesman, which is often how it was in that particular industry. And so I was really kind of trying to figure out where I was going to go in the financial world. I knew that I really enjoyed it. I liked helping people with money and making financial decisions. And I'd always been hesitant to get into investment advising because I felt like it was such a huge responsibility to advise people or to manage, their life savings or their nest egg. And so I had kind of pushed back when I've been invited a couple of times to go learn more about that industry. But I ended up having a meeting with someone at our church's Christmas party. He was a guest, and we were having the, what do you do conversation after it was over. And he shared with me about his company that he had started probably 15 years prior at that time. And they built mutual funds that screened out companies that were involved in some kind of, different kinds of unbiblical activities, whether they were supporting it or even profiting from it. Things like abortion, pornography, addiction, and other types of activities. And I had never thought about, I had invested myself. I'd helped a few people, like not many. I'd helped a few people invest at that point. But I'd never thought about what was going on behind the scenes, how my money was making money, what those companies that I, regardless of how small, had an ownership stake in, what they were doing with their profits, both how to generate their profits and what they did with them. And I remember walking out and telling my wife in the car, I was like, that was probably a providential conversation. And so I ended up having breakfast with him later that week. And then, he introduced me to a lot of other people. And, I discovered there was this, now growing industry called biblically responsible investing. And so it wasn't long until that was enough to push me into the investment advising industry. And so I joined up with a firm there. And then you have to learn how to be an investment advisor. And that's a whole other piece of it. It was easy to help people see that they didn't want to invest in these companies. So we can move from these, secular mutual funds, so to speak, into, these biblically screened mutual funds. But then they actually needed real investment advice, and, it became much more complicated than that. So it was several years of, learning how to be a good financial advisor and so forth. And then after several years of that, I discovered several problems with what I call the typical financial approach. Things that most people weren't seeing, weren't realizing, were causing, massive losses of wealth for average families. And so that was really what pushed me into looking for new ways, a different approach of doing things. That's when I discovered, non-Wall Street investments, and, that means all sorts of things, but really began studying and looking at how to do this in a way that is better for the client, and actually helps them achieve financial freedom more quickly and avoid a lot of the, maybe risks, but also the definite losses that they were facing along the way. So I'll stop there. I could keep talking, but I'll stop there and let you kind of guide our conversation.
Yeah, because I think one thing that I would like to get to know more about, and I think the audience would like to as well, because you mentioned, again, you're not offering investments, from the Wall Street. So can you talk about what type of investments are we talking about? I'm sure like it's pretty wide and diversified, but if you can get into specifics, that would be great too.
Yeah. So we actually do still manage people's money in the market. So we do have a couple firms who manage biblically screened mutual fund portfolios. That's not my favorite, but not everyone is ready to jump, completely out of Wall Street. Some of them do, but some of them want to do it a little bit at a time. So I didn't want to exclude people who weren't, ready to leave Wall Street altogether. I wanted them to have a biblically responsible option as well. But I much prefer the off Wall Street options. And so those are, I think looking at your podcast and what you've talked about with listeners, I don't think any of these will be totally new concepts to them, but helping people invest in single family rental properties. I do that using a couple of turnkey partners that I've worked with who I found do a really good job. And so most of my clients they're not trying to become active, off Wall Street investors. They're not trying to learn everything and do it themselves. I really have wanted to find really good partners who this is their full-time, career, their business, and they're doing a great job of it. And they're looking for those passive investors who have the capital, but don't want to learn all the ins and outs, who don't want to do it yourself. Although there certainly is a place for that, but most of my clients aren't interested in that. So turnkey real estate is one. I'm connected with a number of different passive real estate funds. So whether that's, multifamily apartment renovation, whether it's mobile home communities or self-storage, or, various types of commercial real estate, there are those, funds that typically last 3 to 7 years, that have short capital raises, and I can help investors kind of vet those and find those types of opportunities and, get cash flow and growth out of those. We've got a couple of different kind of multi-industry funds. And so these are active investment companies who are out in, they're already involved in multiple industries, and they're borrowing capital from investors, paying good yields to them. And then they're going out and investing in multiple deals and multiple industries, and, keeping the profits and just paying a steady, interest rate to those, lender investors. I guess one of the more unusual ones would be, life settlement funds. That's one that not a lot of people have heard of, and is, not related to real estate at all, but a really interesting asset class. Harder to get into somewhat, but and takes some decent capital up front. But if you've got the capital and you're looking for, just very good growth, it's an interesting and good asset class. So I'm always open to learning about new ones as well, trying to keep my eyes open and see what would be a good fit for my clients also.
Got it. Okay, so that's very interesting. So of course we can, make a deep dive into, real estate, and of course, as you mentioned, there is a little bit diversification there when it comes to single family, multifamily. I'm sure industrial and different asset classes in commercial and residential space. But can you talk about the differences? Because I'm sure there's a few people who are shouting right now and saying, "What about the stock market? What about investing into startup companies? What about like doing the different sorts of things?" So can you talk about the benefits and the pros and cons, on investing in real estate?
Yeah, I can. The two big reasons, what first got my attention and brought up the problems with Wall Street investing, and I won't share the whole story of it, but basically I was trying to teach my daughter something. I was teaching her something one day, looking at a compound interest calculator, which of course she was probably 7 or 8 at the time, so that held her attention for about 15 seconds. But after she walked away, I kept playing with it, and just noticed a major discrepancy from what the compound interest calculator was showing me and what I was seeing happening on Wall Street, looking at long-term, 20, 30, 40-year periods. During that time, I had been giving a retirement investing strategy presentation to a number of clients, and so I was just really familiar with the numbers at that point in time. I don't watch it every day, but I had been looking at it a lot during this period, and again, just saw that the market did X. And this calculator showed that based on historical long-term returns, it should have done about twice that. And I thought, wow, that's a big discrepancy. And I tried to figure out what was the difference. What's the difference between what I'm seeing on this calculator and what I'm seeing, in real life in the market?
Hmm.
And the only difference was volatility. And I had always kind of thought of volatility as a good thing, as an opportunity, to if you auto rebalance and things, it's an opportunity to buy low and sell high, but between all of your asset classes every time. And so the volatility was really an advantageous thing. But as I couldn't get the question out of my mind, and so I spent several months building a pretty large spreadsheet calculator where I was able to just isolate and test volatility. So all hypothetical numbers, but just testing the impact of volatility. And the more volatility there was, the less money there was at the end, every single time. And so when I looked at typical Wall Street volatility over 30 years, it was causing families to lose over 30% of their wealth. That's so no crashes, not making mistakes, like assuming they do everything right and everything goes kind of according to plan. They were still losing tremendous wealth, much more than they would be realizing. And then I looked at investor fees. At that point, I was running lots of investment analysis for people as well, and seeing what their fees were. And most people will tell you they're paying their advisor, 1%, but all in, most people are paying about 2%. That's pretty typical. And I saw much higher and I saw much lower, but that was a good average. And so when I looked at that 2% fee, it was causing, obviously it's a loss, but another massive loss. When I combined those two, when I said, someone who's averaging 10% on paper, they really were averaging about 5.5% in real life, if they made no mistakes, if they did everything right and everything went according to plan. But they were losing, over 50% of their wealth potential just from those two things. And I thought there has to be a way to get stock market like returns, but avoiding, these volatility and these fees. And of course, that's when I found non-Wall Street investing. And really you can get much better than Wall Street returns, without the volatility and fees, as I began to learn more. But that's what drove me to looking at those. Startups are a whole different animal. And so I don't have any issue with people investing in startups. They're very speculative. And so you need to be willing to lose that money. And so most of my clients are,
That doesn't sound
not,
good. When you say
yeah.
that, that doesn't sound good.
I mean, the return potential can be high, but you're probably going to, lose more and win a couple. And if they're good wins, okay. But if they're not, it's just a speculative game. It's gambling in a lot of ways. And unless you're really knowledgeable and have, you're not just the average Joe and you really know what you're doing. I mean, certainly people have made a lot of wealth doing that, but my clients are not typically ultra wealthy people. They're average families. And I've always followed the, win by not losing advice. And that doesn't mean we don't take risk, but we don't take unnecessary risk. We like to look at investments that have collateral underneath them, that have some sort of security and a good chance of winning and succeeding, not a hope of winning and succeeding, so to speak. So I'm not anti anything out there, honestly, but for my clients and for, achieving financial freedom with, average incomes and average, net worth, real estate and some of these other non-Wall Street investments have proven thus far to be the best way to do that. The best way to focus, not on accumulating for 40 years, but building up cash flow as quickly as possible, and having that freedom of time to then do whatever it is that you want to do with it. And that could include continuing to grow your wealth, but it may include doing other things as well.
Got it. Got it. Okay, thanks. And again, you put me now in a position where I have so many different questions that I wanted to ask you. But first, I want to kind of put it out there for the people who, again, as you spoke about the stock market, and as you mentioned, there's kind of regular type of people that come to you and ask him for those investment advices. So it does make sense that those type of people will lose a lot of money in the stock market because I said, volatility and just what's happening with the currency. I mean, like you cannot win against inflation when you investing just at 10,000 or 20,000 in the stock market. And of course you always will come out as a loser because of the fiduciary fees and all these things that happen in Wall Street, especially when if you diversify. But talking about real estate investing, like let's say if I'm a person, I'm coming to you asking for advice, like let's say Jared, like I have 40K, is that enough for me to invest? So how is that, how is that conversation goes with you? Like, how do you guide people to the best financial investment decision?
Yeah, great question. I like to take or follow the protection, savings, growth model. So a lot of families come to me, and we do try to put all their finances kind of on one page, and at the top is protection. So that's, life insurance, disability insurance, home and auto liability things, all the things where we can have those catastrophic losses. And typically we see the very minimums up there, or maybe a little bit of life insurance and a minimum on everything else. Savings is very minimal. And then they may have a lot of investments. And that's great if everything goes according to plan, but it often doesn't. I've met with enough clients who are, in retirement to hear that life did not go the way they expected it to all the time. And unfortunately, even now being in my 30s, I'm on my way out of my 30s at this point, but I've, unfortunately seen some tragedies happen in enough families to know that, hey, it does happen. And so that is how I help people get started is I know the investing is fun and that's exciting. We want to make money. We want to get returns, and it hurts. It hurts us to not put our money to use. But honestly, it's a very good use of money to get protection in place first. Then we focus on savings because, as you mentioned, you didn't mention this, you kind of alluded to this, but a lot of the non-Wall Street investments do take some lump sums. They may not be huge, but you can't put $100 a month in, to most non-Wall Street investments. We actually do have a couple of those, but they're really good investments. Take, 25, 50, 100 grand, to get into. And so we encourage clients to save, beyond an emergency fund, to have an opportunity fund. So that when those good investment opportunities come, you've got cash to go make use of those. And I encourage them not to put their savings at risk in the market, because then the opportunity may come along, the market's down, you have to sell at a loss, or you don't have enough money in there right now to make that investment, and you lose out on a much better investment. So once protection and savings are in place and they're where they need to be, then we can really focus on investing. You threw out 40,000. That'd be plenty to get started with a single family, rental property if you were going to finance and borrow some of the money to do that. And that's what I would encourage most families to do. Typically for other non-Wall Street investments that we have access to anyway, minimums are about $50,000 to $100,000. And there's some really good ones in the $50,000 space. In fact, my favorite ones are really around there. So yeah, typically 25 is kind of the minimum to get started off of Wall Street, besides just a few really low minimums that we have, but they're not the best investments out there for sure. So we do encourage people, again, to get the protection in place, get their savings in place, and then you can focus on those really good investments, get that good cash flow, get good growth. And honestly, I've run some numbers to test this. You can get the financial freedom a lot faster than focusing on investing day one and never having access to the best investments. And certainly if something goes wrong, that's going to set you back tremendously.
Okay. So the question that I have, again, as you mentioned, the portfolio, like the options when it comes to investing in real estate, there is more than one. So there's a single family, multifamily. So like, if I'm willing to invest in, let's say it's going to be a 50 or 100K, like what will determine if that's a good investment or not? Because if there's a quote, I think it says sometimes the best deal that you get is the one that you don't buy. So how do you know, like that when you like investing in those type of deals, how do you know if it's a good or bad deal? Like how that conversation goes?
Yeah. So figuring out, where to begin, like if you're starting investing, off Wall Street, That really is a conversation we have, and often it comes down to preference. So are they looking for cash flow? Are they looking, for maximum cash flow? Are they looking for, maximum growth? Are they looking for some cash flow and some growth? And so that's going to kind of eliminate or give us some guidance there. Risk tolerance is one issue. Looking at single family versus multifamily. I think single family, really has the least risk, especially if you're working with a partner who's done the renovation. They know what they're, they do 300-400 a year. They know how to do that extremely well. They know how to make the properties very landlord friendly, very low repair, need, and so forth. That's going to eliminate a lot of the risk. And so now your risk is just vacancy and then the, occasional repairs and things to come up. So it's very low risk in my opinion, and you own and control the asset. So there is no operator, there is no fund manager who could potentially create some problem or loss for you there. The returns are good. They're not, the best. They're not going to be at the same level as some of the multifamily we have access to. On the multifamily side of things, that's even more passive than turnkey real estate. I mean, you literally put money in, you do nothing. You just wait and collect your cash flow and collect your growth at the end. But because there's an operator there, because it's a bigger thing, because it's not something that you own and control and could just go sell if you wanted to, there is a little bit more risk involved. I mean, not greatly, but there is some different risk involved with that. So that's really how we figure it out. We figure out, again, what their risk tolerance is, whether they want any kind of, control, but that also comes with some responsibility, or whether they want 100% passive and are okay with taking on the, slightly increased risk with having an additional operator in the mix. Or it becomes about diversification, like, hey, we've already got 5 of these, so we want to get into this, and so that may be how we're discussing it as well. In terms of how to tell whether a deal is good, I am primarily looking at those operators, and then the business model itself. So I'm not always, underwriting the multifamily deal myself. That's what they're doing. So I'm looking at how long have they been doing this? Who are their partners? What about their past would inform how they would do this today? I'm looking at character traits and integrity and things like that would let me see that they're going to do the right things. They're going to make the hard decisions. They're going to even take a loss if it means protecting their investors. That's the type of operators that I'm looking for. And hopefully those things don't happen, but that's what I'm looking for. And so when I have a high level of trust in both the operators, character and their experience and knowledge, and I know that there's multiple people involved who are underwriting those deals, and then it's an asset class that makes sense. Apartment renovation makes sense. Like, it's typically going to work out unless there's just things that are missed. And that's where a good operator and good insurance comes into play. So that's primarily what I'm looking at. And then we look at each deal, is there excessive risk in this one over other typical multifamilies? So we should just avoid this one, focus on the next one that comes down the road, because this one has an unusual amount of risk for some reason. So I'm looking at those things, but I really want to find those active partners. I can't know everything about each asset class. I mean, I just realistically can't. So I'm looking for those experts who have the proven track record. This isn't their first deal. This isn't their second deal. They've got several under their belt. They've proven that they know what they're doing. They're going to be able to deliver unless something just completely unexpected happens. And there's always risk in investments, but I want it to be something completely unforeseen that happens that, causes a loss if it does. And then I feel very comfortable helping clients figure out which of those makes the most sense for them and getting them in contact with one another.
Okay, yeah, because that's what I wanted to ask you. Do you provide them like contact details so they can go and kind of vet the operators themselves? So we do that as well.
Oh, yeah.
Yeah. Okay. Got it. So can you go through the process? Because I think it will be kind of interesting if we're going to look at the process itself. Let's say I'm investing 100,000 right now, and can you go, take us through the process? How is that, going to look like percentage wise? Like, what, like how much money should I get back in one time? Is there an exit strategy if I'm going to get the tax advantages? Can you talk about those type of things?
Yeah. Do you have a question about a particular asset class or just more like how I'm having that conversation with a client?
No, I think it will be in multi. So let's say the example is going to be for multifamily. I'm investing 100K. So like, what should I expect? And you don't have to go very specific in it because it's based on deal to deal basis, but just as an example.
Sure. Yeah. Most of the multifamily deals that I have seen lately and have clients invested in, they are focused on both cash flow and growth. And so they're typically, 5 to 7 year deals. They're value add properties. So they're properties that are already stable. They're not run down, D or C class. They're looking at, B class properties that are in good condition, but have a lot of room for improvement. They're the competitors around have done really well, and so they're trying to get them up to that standard as well. They're looking at increasing occupancy and increasing rent. So typically occupancy is above break even, but there's room for growth, and rents are going to be, you know, below market value rents at this point. And so these operators are going to buy the, you know, they're going to buy the apartment building. It's cash flowing from day one. They're going to bring in, you know, typically better management. Usually they're buying ones where the owner has managed for a long time and they're just over it. And they're, you know, they're ready to retire. And so they're going to bring in a management company, improve customer service, look for opportunities to, you know, add amenities, add playgrounds or pools, or, you know, increase security, obviously fix things that are out there, just make it a much better, safer, more quality place to live, a more beautiful place to live, a more desirable place for families to live. And they're looking for, you know, markets that have growing, you know, growing businesses. So companies are coming and building, and, you know, building plants and building headquarters and things here. And there's a likelihood that there's going to be a continuing, you know, tenant population. So from the investor standpoint, those are typically showing about 7 to 9% cash flow is what I'm seeing. So just, you know, year over year cash flow, with a good, you know, equity bonus at the end when they sell. So I've seen them structured differently, but one I've seen several times over now, it pays 8% a year cash flow for 5 years. So you get, you know, 40% return on your money over those 5 years. Then it, you know, once it sells, or if they refinance, however they do it, but typically they're looking at selling. And you're going to get return of principal plus a 60%. So they're looking at, you know, essentially doubling the 100,000 over a 5-year period between a good, respectable cash flow and a really good, you know, equity bump at the end. So those have been what I have seen, and I really like those. I mean, those aren't super aggressive numbers. I think that's most of my families are ecstatic with a return like that.
Okay, got it. And can you mention the states that those deals are located in?
Right now, I'm seeing one who's doing a lot in Colorado. I think they're on their 4th project in Colorado. Another one is being pretty active in South Carolina. It's typically these secondary markets, so to speak. It's not your LAs or your New York Cities. It's your, you know, your Nashville's, your Columbia's, you know, your Colorado Springs is where one of them is located. So they're looking at, you know, growing urban cities, but not the massive urban cities.
And how big are those projects? So we're talking about like 10-unit deals, 120-unit deals. How big are the projects?
Yeah, I think most of them are ranging about 1 to 200 units.
Got it. Okay. So, I mean, what's happening with some of the operators? Like, how many different operators can you offer for the people? How many different choices when it comes to, you know, single family and multifamily?
Yeah, I look for really good ones. I'm not trying to have a lot. I'm looking for ones who are regularly coming out, you know, 3-4 deals a year if possible. And you know, if they don't find good deals, I'd rather them not bring out a bad deal. But you know, ideally, I'm looking for operators that we can invest with over and over. So I've got 2 operators in multifamily. One is kind of budding, and he'll probably be on there later, but I'm going to let him get a little under his belt before I'm introducing him to clients. I just think that's wise. We'll see how these first few work out. He's got good people with him, but I want to, you know, let him test it a little bit. But the 2 that I'm working with now have a lot more experience. And on the single family side, about a year ago, I interviewed 25 different turnkey providers across the country and was trying to find really the cream of the crop. And as I kept talking with them, I learned, you know, the criteria that really was best for my clients and what I was looking for. So I've narrowed that down now to 2 who I think are excellent, experienced turnkey providers. And they both have plenty of inventory. So until we are exceeding their capacity, I'm not looking for new providers there. I'm happy to work with those really proven ones and consistency there.
Got it. Okay. So coming back to the questions, I'm sure I'm not asking some important questions because, again, you having all these people coming to you and asking different questions about, you know, what is the best investment, what the returns are going to be. But what is the question that I'm not asking you, but people ask you most of the time?
Oh, that's a great question. You really are asking pretty good questions. a lot of my clients aren't, you know, they don't know what to ask. That's why they're coming and working with me. They don't know how to go out and find those types of opportunities themselves. So they're relying on me to do that homework for them. You mentioned tax. That often comes up of, you know, should I do this with my IRA? Should I do this with non-qualified money? You know, those sorts of questions. That's always a case-by-case basis. My preference is to see people not invest in their retirement accounts and give up that control, especially off Wall Street. We can have good tax advantages. They're not, it doesn't eradicate all the tax, but we can lower significantly the tax burden without having to use a retirement account where we lose up control, where we can't have the cash flow, coming into our personal lives until we reach retirement age. So that's my preference there. But of course, people come to me, they've already got hundreds of thousands or millions in IRAs. And so, we got to keep it there, at least for the most part. And so then we're not having to worry about the taxes so much. So those are questions people ask. Most families are asking, just should I focus on debt? Should I focus on investing? What about protection? Like it's much more of the big picture, the big lever, and the big impact questions. And or at least that's what I'm trying to help them focus on. I guess they come in asking me questions that I'm like, those aren't the important questions. Like we need to take several steps back and look at this big picture and look at the big risks and the big opportunities. And I'm not concerned about this 1% rate or this one tax payment or whatever. Like that's not my concern. I want to see what's going to make the biggest impact, on your financial life over the future. So that's what I'm looking for when I'm working with clients. You haven't asked me a whole lot about risk. We've talked about that some. So that's certainly questions that come up. But the best way to mitigate risk, even here, is to be diversified and, just not have all your eggs in one basket. So even off Wall Street, we try to be in, multiple deals, multiple industries, multiple operators, and really just spread that risk out because anyone can have a loss.
Yeah. So talking about diversification, are you going to be offering some different commercial type of, real estate investments in the future alone, like industrial, office, retail, something like that?
Yes. Yeah. We've had a few commercial. A lot of those are for accredited investors only. And so that limits, not all of my investors are accredited. I have a lot of almost accredited investors and a handful who are accredited. Again, I'm working with more average families. So they're not most of them aren't multimillionaires. There's a few of those, but most of them aren't at that level, at least not yet. They probably will be, but they're not there yet. So yeah, commercial. Sorry, I lost my train of thought of what you had asked me.
Yeah.
We do have a couple of providers in the commercial space. Some of them are doing debt funds, but they're paying pretty good, rates on gap lending, filling in the gap bridge loans, on commercial projects, and those can be really good positions to be in, and investments that I like. One recently did a bridge loan to build a new student housing facility, and had very good returns on it. Built it really quickly. COVID didn't slow it down at all. Which was surprising. And so it's about ready to pay off much faster than expected. And so that's been a really good one. And they actually had a really low minimum. They had a $5,000 minimum, which was surprising as well. So I was excited to help some people get in who, normally wouldn't have been able to get into that kind of an investment. And then there are some for accredited investors only, but that are more, much larger scale retail projects and things like that.
So talking about what you have currently, single family and multifamily deals, and I'm guessing you're probably offering more kind of a, I guess from my perspective, at least what I'm talking, the people that I'm talking with, a lot of people are looking towards multifamily. So maybe talking about multifamily specifically, is this possible again for the people invest as accredited investors with a limited amount, let's say 50,000, or maybe they can invest in those deals with a, self-directed IRA and Roth IRA? Is that possible?
Oh yeah, definitely. And some of them require you to be accredited. I have some of those at the $50,000 mark for non-accredited investors as well, which is really good because that can help them get to that point eventually. But yes, I actually am not a huge fan of using IRA money for turnkey investing if you're going to finance it, because that gets challenging and difficult. But for multifamily, there's no issue there. So yeah, you can definitely use self-directed IRA or Roth IRA, or even self-directed 401k or things like that for investing in multifamily. That works out beautifully. In fact, most of my clients in multifamily, it is their IRA money.
Yeah. Okay. Good to know. So things that I wanted to kind of cover again, because you have two podcasts. So first of all, I want to know why do you have two podcasts? Because one of those are called the Biblical Wealth Podcast, and the other one is Build Biblical Families Podcast. So what is the difference between those two?
Yeah. So the Biblical Wealth Podcast is a lot more of this conversation and a lot more topics, so it's my educational platform for people who are interested in what, the business does. It's where I get to have these more lengthy conversations and go in depth and answer the questions that people ask, and answer the questions they should be asking but don't know to ask, and interview guests. Like a lot of these investment operators have come on. Some of the insurance experts that I work with have come on and talked. And so that's a great platform, again, for just giving that knowledge and letting people, learn passively while they're driving or while they're cooking or whatever, and be much more prepared for when they, do want to call and have a conversation with me. They know much better questions, and they've already heard a lot of the information. So we're not starting from the beginning. So, to your business minded listeners, that was about scalability and leverageability and, making good use of my time. So that's, if you enjoy this conversation, you would enjoy the Biblical Wealth Podcast. Building Biblical Families is new. It's actually not released yet, so you can't find it on iTunes today. Hoping for a November release. We'll see how time allows, but that's my plan. It's released in November, and it's going to release with about 25 episodes. And so that really is serving multiple purposes. To be completely honest, again, for our business-minded people, the original reason for that was additional marketing and broader marketing for the Biblical Wealth Podcast. I found that as I was a guest on podcasts like yours, and even goodness, I had a couple of opportunities where I literally had a 15-second voiceover for just a friend. I was like, hey, I'll do a favor. I'll read this thing for your 15-second voiceover in his podcast show. But he mentioned, my podcast at the end as a thank you. And I've had clients come through from that. And I was like, okay, so just even a little bit of exposure, people are interested, the right people, are interested in the Biblical Wealth Podcast. So the best way for me to, get more exposure to that is to have a different podcast with much more broad topics, but for the same, ideal audience, which are Christian families, and even grandparents. Like I have a lot of senior clients as well. But as I have begun scheduling conversations and now having conversations and recording these conversations with people, I'm realizing that I'm having conversations with people that I need to learn from, as a father, as a husband, as a believer. I'm most interested in the conversations where I'm being encouraged and I'm being challenged and I'm finding new resources and, learning how to just do better at, the non-work stuff, the really the more important stuff that God has given me to do in my life. And so it's been an extremely encouraging process for me. And so I'm hoping that it will be, really interesting and valuable conversations for listeners as well. Providing them resources they haven't heard, just having conversations they would love to have, but don't have a platform to have them, with true experts in a lot of these areas. And so it definitely is its own thing. And I want it to be very valuable in and of itself. I'll also be very happy if it helps to grow, the overall business as well.
Awesome. So again, beautiful name, the Biblical Wealth Podcast and the Building Biblical Families Podcast, which I'm sure it's out by the way this episode will come out. But
okay.
another thing that God gave you is three beautiful children. So again, I want to mention one thing. I don't know, because I know you homeschooled them. At least that's what I'm reading, from the bio. So was that a decision prior to the COVID, or COVID kind of forced you to do that?
No, we've been homeschooling from the start. So we spent a while, deciding what kind of education we wanted for our children before they were, the oldest was school age. So not before they were born. We certainly weren't thinking about that then. But by the time we had the first, and she was getting close to school, we had to begin thinking about that. So we've been homeschooling for about 6 years now.
What is the difference? What is the difference between taking to the kind of regular school and homeschooling? Why have you decided to do those?
Oh goodness, that would be a whole other episode as well. Man, for a lot of reasons. We had a lot of concerns with some of the things that are being taught and some of the, mindset and philosophy that's being taught heavily in the public school system, even at really young ages. So we did want to avoid that. It wasn't because we wanted to be hyper Christian and everything. Like, we don't only study the Bible. We do study the Bible, but that's not all that we study. And, we don't have Christian curriculums for every single thing that we do. It was more about, there's just a lot of, I'll use a biblical term, foolishness that's taught in the public school system that we did not want to teach our children. We didn't want to be unteaching them things when they got home every day. We did believe that we could give them a better quality education because they would have, 1-on-3 now, attention versus 1-on however many in a setting where there's virtually no flexibility. We also wanted family flexibility. We can take vacations while everyone else is at school. So we can go places when it's not crowded. If we need to skip a day to focus on something else, we can. If we are on the road and, if I have a training or speaking opportunity and we're on the road, like my family can come with me and they're not missing work. They're not missing school. We can do that as we go. So it really just fit with what we ultimately wanted, with our lifestyle and what we wanted with our family. is the primary reason. There's been it's been hard. Like it's not been easy though. Like that all sounds good. Like, ooh, we'd love that, but it is hard work. My wife is doing most of the work. I'm kind of in the headmaster role and helping make big decisions and just helping her think through things. But she's the one obviously like actively doing the work. And I've had some homeschoolers on the biblical or the Building Biblical Families podcast, and we joke about how, all homeschool moms have their frequent days where they're crying and they want to give up and they feel like they can't do it and they're inadequate and something's wrong with them and they're going to ruin their kids. And I'm like, none of that's true, but it feels that way a lot. Yeah.
No, but that's awesome. That's definitely awesome because it's a huge commitment, because most of there are parents that are sending their kids to the school because for one reason, sometimes it's just like, I need to take a break from my kids, and it sounds bad, but some of that is reality. Some of that is like, they don't know any difference because some of their parents, maybe they don't have the right principles and lives themselves that they can pass on their own children. So, and again, you have the mentality and everything is kind of in place. So, for you to do those type of things, even though sometimes it takes patience and hard work and you still have those days, but I think it's going to be different results and a different impact on your children and on, grandchildren and what they're going to do with their personal lives and the impact that they're going to have on other people. So
thank you. That's what we're hoping for. I appreciate you saying that.
No problem. So listen, one thing that I wanted to ask you before we're going to go, because I love the fact what you're doing with the podcast, but more so that you're helping people to kind of direct them to the right place when it comes to investing. So it's awesome. I love it. And you're talking with the people on a day-to-day basis. Having people on the guests as a personal podcast, speaking on a podcast just like this one, which I really appreciate you coming on today. But the question that I wanted to ask you, what is the legacy that you want to leave behind you?
Oh, goodness. I've thought a lot about that lately. I don't have a short, concise answer for that at all. I have been studying stewardship a lot lately. And so, I hope that personally, I am able to, be the best steward of all that God has given me. So not only my money, but my time and my family and my relationships, my relationships outside of my family, the gospel itself, and just the skills that he's given me. I want to be I want to use all that he's given me for, productively and to give him glory and to serve others. I don't know what he has in store for the rest of our lives. I don't know what my kids are going to do, with their lives and even my grandkids. I don't know those things. So I think being a faithful follower and the best steward of all God has given me is the best legacy I could leave. And regardless of what that ends up looking like, if I have done that, I would certainly be very, very pleased. That's easier said than done. I won't do that perfectly, however.
Yeah, exactly. Easier said than done. Yeah, but I'm sure you're going to do a great job, because again, what you're doing currently, you're leaving a great impact, and especially during times like these where there's a lot of uncertainty and a lot of people are confused what to do with their personal lives and, investment decisions. You're steering those people towards the good decisions. So, that's very important. So, and there's more to come towards your way, from here. So, guys and girls, one thing that I wanted to ask you before we're going to leave, if you pass this episode along to a friend of yours who is looking to make those good investment decisions, because that person is going to find a lot of knowledge, strategy, tips, techniques, motivation too, on making those investment decisions happen. So make sure to pass this episode along. Again, Jared, thank you very much for coming on this episode. And as always, I'll see you next time. Thanks for watching.
All right. Thanks, Martinez.